Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here for a US dollar, Canadian dollar Forex market analysis for February the 1st through the 5th, 2021. Real quickly, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Also, if you haven't done so already, please sign up for our YouTube channel at Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com. Paperback and Kindle versions are available. Okay, with that, let's go to the forex-trading-unlocked.com website, and we will already have the workstation page pulled up with a US dollar Canada chart ready to go. We're going to skip past the numbers and things like that as far as that are coming out at economic releases, because we got a lot to talk about here. The US dollar, Canadian dollar has completed a head and shoulders bottom as of last week, and right now, as you can see, it's trading a little bit lower starting off the week here. But this red line here, this is where you can see how it has taken out the head and shoulders and has launched that. So right now we have coming off that first shoulder, that is our higher move low, and now we are looking to see if we can continue to make higher move highs and higher move lows. As you can see, on Thursday and Friday of last week, we pierced through this $28.30 up to $28.41 range and settled just below it on, or excuse me, just below this first one here on Friday. Now we're trading a little bit below it, which I think right now you're just seeing a little profit taking on this one, and you're most likely going to see some US dollar strength coming in. As far as a big upside turn of events, that is not what we're looking for. We're looking for a breach of the high from last week at $28.87. Above there, we most likely will see a little fresh buying momentum targeting this upside target zone at $29.85 up to $30.80. So that is the prognosis to the upside. Key levels to look out for here. We have this $26.81. This here is a significant monthly number as far as being a pivot, and it looks like it found a nice little base here with the head and shoulders formation, which gave us the buy signal. And now with that, if this signal holds, then the upside target zone would be about where that would take it to. Now, this is being looked at as just a short-term correction. Overall, remember, the long-term and medium-term trend for the U.S. Canadian dollar is lower. It has been making lower move lows and lower move highs for months on end. The fact that oil prices are going up and the XL pipeline now has been cut off from Canada, that's going to probably bring up the price of more commodities once again, especially oil and natural gas. So, and that's, I would think, going to give the US dollar bulls a little bit of a tough time trying to get a big rally going. I think right now, if anything, what we're going to see is a continuation of the short-term, hourly, daily bullishness that will, as long as we keep making higher move highs and higher move lows, that will keep us in the short-term bullish mode. But remember, that's only on an hourly and an intraday basis and daily basis, because we just bottomed just a little over a week ago. So we have the head and shoulders formation. We have our bullish breakout line that we still are trading above. And once again, unless we fall below $26.81, I think you're going to see that as a support base, to which we will most likely see another run for newer move highs. And especially if we can get a rally above $28.87, that would confirm new highs after higher move lows, which is indicative of what? A continuation of a bullish trend. And then most likely we would see the upside target zone hit right into that $29.85 with $30.80. Like I said, I think this will be the extreme. I'm not looking for any major upside move. This market has been just getting beaten up for months on end. So I think that's really what we're looking at, is a chance for the dollar to get a little bit of a correction. And if you look at the dollar index as well, the way it ended last week, it's kind of in a neutral zone here, but as long as it doesn't fall below 90.03 here, this market will the index will be bullish. Now, we had a bullish engulfing line buy signal that was triggered at the beginning of January, and we've made higher move highs and higher move lows. So as long as we do that, we're looking for a challenge of resistance here at 90.97. Currently, to start the week off, the market's under pressure, but right now we only have the Asian markets open. European markets are coming online yet in another few hours, so I think you're seeing just a little follow through from Friday because there's not really that much action going on yet, and especially for the U.S. dollar, Canadian dollar. Now, should we see a little bit of a slide in oil prices, then I think you might have a chance at seeing the U.S. dollar, Canadian dollar continue this rally and definitely hit the target zone, as well as if we see interest rates in the 30-year note, if they continue to stay choppy and if they fall below $170 basis points, then that would be a bearish indication, especially if it gets back down to 168 to 167. While the short-term interest rates are at the ceiling, that means long-term rates are pushing to try and make rates higher. No matter what the Fed does, it's going to dictate higher rates in the marketplace because of the risk and that is on the table moving forward as we go into the first quarter of 2020 or 2021, excuse me. So that's what we're looking at here for the U.S. dollar, Canadian dollar. And I just want to remind you to definitely subscribe to our YouTube channel, Forex Trading Unlocked, as well as check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And if you are listening to our stream right now, we will be back in just a few minutes with another live video. We're doing some individual market snippets right now. So we have done a weekly video for market analysis for all the markets already for the week, but now we're hitting on some individuals. So thank you very much for your time, and we will see